Exports have been in the negative territory since December 2014. At the same time, imports have been broadly in the manageable range, and as a result, trade deficit has been in the comfortable range between $10 to $12 billion. To talk to us about these issues as well as issues related to our bilateral ties with major trading nations like China, United States and the European Union, we are being joined by Commerce Secretary Rajiv Kher, who has about 9 years of experience in Ministry of Commerce and Industry. Barring 1 month, that is November, we have been seeing consistently exports being in the negative territory, and that has been the trend. In fact, it seems that as far as export growth is concerned, it's going from bad to worse. The usual explanation is that demand in overseas markets, that is not strong. But does that only explain this huge and consistent fall in exports that we have been seeing since the last part of 2014?
Well, this whole dimension of exports going down is definitely alarming, and we are concerned about it, and particularly by the fact that for the last 6 months it's been coming down. Now, I would definitely say that global economic situation is, of course, one of the major contributors to this decline. But clearly there are other issues as well. And the most important, of course, is the overall slowdown. You look at any market around India, and you would find that except for possibly the exception of the United States, every other market seems to be either stagnant or growing at a very, very slow pace. As much as that Asia, which is one of the largest destinations for Indian exports, has also been generally slowing down, whether it's China or Japan or any other market, ASEAN. So that is one, of course, a major reason. The another reason is the typical constitution of the basket of India's exports. If you look at India's basket of exports, about more than 30% of exports are coming out of petroleum products and gems and jewelry. And because the petroleum prices have gone down, so therefore consequent reduction of petroleum product prices is also.
So the price effect as far as.
So price effect is there.
Right.
On the gold side again, you see that because of the slowdown, the impact is very clearly on the gems and jewelry sector. And so this was a second point. And the third point is that we cannot ignore the fact that we are still in a situation where many of the areas we are becoming less competitive. And I was looking at the figures, and if you look at electronics, for example, or look at plastics, now clearly while there is a strong impact of the overall slowdown, it is also a matter of fact that we haven't regained our competitiveness.
When you say competitiveness, are there structural issues because of which this has happened, or are there other issues like taxation and all which is contributing to this?
Well, I would largely say structural issues. For example, infrastructure is one big issue. Ease of doing business, which has facilitated a lot in the last few months and a year, definitely is still something which is a work in progress.
Now, if you look at the numbers, one interesting fact was that since December, the number is stuck between around 24 to 25 billion. I mean, 22 to 24 billion.
Yeah.
So clearly there seems to be a capacity effect as far as exports are concerned. But this is a very serious issue. If this is not addressed, then in the long term we are going to lose very badly. What, according to you, are the measures that are needed, and are those measures needed immediately as far as exports are concerned?
See, measures would be required on both sides. One is the front end side, and that is where these small incentives that we do by way of export incentives do help particularly the small sector. But I think there are other major and much more substantive ways in which we can help. And one of the help that can be rendered is, for example, reducing the cost of capital. And there is a clamor in the industry for seeking the interest subventions.
Before I go into the long-term and medium-term measures, can you give us a timeline by which we can expect the interest subvention scheme to be up and running?
Well, I am working with a time frame of about a month. We should be in a position to see that interest subvention scheme is rolled out within a month.
And you were talking about mid-term and long-term measures as well.
Those are issues which are more intrinsic to the manner in which our manufacturing sector is organized, or our services sectors are structured, because that is where the competitiveness of individual firms and competitiveness of sectors will come into play. And there we have to take cognizance of the fact that many competitors are emerging. There are several countries amongst the developing world which are now competing side by side with us in many of the.
In fact, Bangladesh is there, Vietnam is there.
Many of the traditional areas, Bangladesh, Vietnam, Turkey, Mexico, a whole lot of areas. So clearly, unless we become competitive vis-a-vis these countries in some of these product areas which contribute very heavily to our export basket.
Then who should take this? Who should be making intervention in terms of a government department? Because Department of Commerce, your primary role is facilitation of exports. These are issues which you are talking about will need much more long-term, interventions. According to you, what should be the way forward? Should there be a common strategy as far as exports is concerned, or should Commerce Ministry continue to be the nodal agency for pushing?
No, that's not. See, I think you are absolutely right in emphasizing the fact that ultimately this is a strategy which has to be a pan-government strategy, and it cannot be specific to one department. While one department can be an anchor department, but the strategy will have to run across the government process.
Are we paying the price for doing away with benefits for special economic zones? Because when that happened, you immediately saw capacity addition in SEZs coming down drastically, and perhaps no capacity has been added for quite some time now. Are we paying the price for doing away with benefits for SEZs?
Well, from the perspective of the Department of Commerce, I strongly believe that we are, to an extent, we have minimized, or rather reduce the advantages which SEZs could have given us. And therefore, it's not very difficult to prove. I mean, you look at the past export figures from SEZs, we have gone down. And my view is that, yes, clearly the incentives that we had committed, we had to withdraw for whatever reasons, and I think that has had a role on the performance of SEZs.
Will you continue to push for?
Absolutely, the Department of Commerce will continue to pursue that.
Right. Now let's talk about imports. And let's talk about imports in terms of the kind of GDP growth that experts are foreseeing, and everyone is talking about a stronger GDP momentum going forward, which means that import of capital goods, import of intermediaries, that will increase in the midterm. What impact could it have on the trade deficit? And should we be getting ready for a regime where exports will remain weak, while imports could be seen rising in the near term?
I think this needs to be seen in balance. See, when we are focused on domestic consumption, when you are focused on manufacturing within the country, then clearly imports is something which you have to account for. It is not possible that India would be manufacturing the entire value chain of a product area. So imports are bound to increase, and that is in fact a sign of greater economic activity within the country, provided the imports are of intermediate products, raw materials, and so on. So clearly you are laying more emphasis on converting them into finished products.
Right.
So that is a good sign, and I would say increase in intermediate imports is necessarily to be construed as a greater economic activity in the country.
But having said that, this will have an impact on the trade deficit, which broadly had been under manageable figures, $10 to $12 billion.
In a short term, possibly.
It might go up.
It can go up, but in the medium term, as the global economy picks up, and that is what is a large perception, that maybe a couple of years and it will start coming back. And
how do you see exports going forward? Because last month it was a terrible number. Going forward, do we see such numbers?
Well, I'm not very optimistic in terms of looking at a very high increase. I mean, to be honest with you, I cannot predict today that next month I'll start looking at the reverse of this cycle. But clearly, if you look at the overall annual growth, we will end up with a very small margin.
Which means that we'll be in that $300 to $314 billion range annual exports?
Yes, if you look at the present, it's too early to predict that, and I have no mathematical exercise done for that. But if this is the trend which continues, and if we don't really see a reversal in a global context, then clearly we will be subdued in growth of exports.
Before I move into the other topic, my last question regarding exports and imports, and this is regarding gold. Broadly, gold has been under control as far as imports are concerned. Government has launched schemes like gold monetization scheme. Will that be enough as far as controlling gold imports are concerned, or more interventions would be needed?
Well, I think the gold import figures are being very regularly monitored, and I was looking at the figures. I think, as you know, there is a sustained level of imports, and that doesn't give us a cause of extreme alarm.
On that note, we will take a short break. Stay tuned.